that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Or should I say this slowly? Welcome to today's webinar. Let me remind you that the purpose of today's webinar is education. This is not an alert service. I am not here to make trade recommendations. However, I will conduct technical and fundamental analysis in real time. Wait, I think I screwed that up. Wow, I haven't said it in so long. I will conduct technical and fundamental analysis, pip by pip, candle by candle, with the overriding goal of helping you put together trade plans throughout this beautiful New York trading session. Is that right? If you're trading along with me using a demo account, then regardless of whether your plans are successful or not, you will have an opportunity to learn. Stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Something like that, right? It's been a while since I did that one. Hey! 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 It's not quite right, is it? Is it down? And then I'm close. What? It's not quite right. Anyways, hey. That's better, right? Hey, my name is Wayne McDonald. I'm the Chief FX Market Strategist for TradersWay.com. Thank you very much for being a client. Como taleville, I salute you. If you're new to these webinars, then check it out. I'm going to share with you the Traders Way business model. Blum, 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 blum. If you are new, let me share the logic here. They are investing into your success today so that over time, like water over a stone, slowly but inevitably, you'll gain confidence in the skills you need to trade real money. And when you do, just out of loyalty and respect alone, not because of fast execution speed, not because of competitive spreads, not because of world-class customer service, but just out of loyalty and respect, you will choose Traders Way as your broker. Yeah, that's the way to do it. So thank you, Traders Way. So make sure you write that down. Why don't you start today by visiting Traders Way, opening up a demo account, downloading MT4, and then right below this video, there's a link to download my chart templates, the exact same files that go into my MT4, so your charts will look like the ones behind me, will go into yours. In fact, these chart templates I've actually downloaded from that link and installed on that machine. So now that machine looks like this machine, which looks like your machine, looks like our machine. So why don't you start there, huh? And by the way, those download files are temporarily free. My exam, I didn't do as well as I would have liked. You know, I have no excuses because I'm like, oh man, this is a pretty good exam. This is a pretty good exam. This is a pretty good exam. And then I did average. I don't like average. So I don't know. It should have been better. I suppose it could have been worse. I don't know. So there you go. It's terrible. Yeah, I should have done better. I don't know. Should have done better. Yeah, should have done better. I don't know. Yeah, but I guess that's what it's supposed to be, right? So anyways, I mean, it's 40 topics. You have a minute and a half, no, less than a minute and a half per question, 40 different topics. I don't know. I got nothing but bitching and complaining, I suppose, right? What do I study at Harvard? Well, this particular semester, I did microeconomics and statistics. So I'm now studying for my statistics final. I'm meeting with my statistics coach at noon. Yeah, I have coaches, dude. Well, it's still Harvard. Well, I'm trying to get on the dean's list of academic excellence. So I'd be like crazy disappointed if I got a B+ in that class. Like just melt. I have to get an A. I might get an A-. I should get an A-, but I'd be devastated if I don't. So that's how I am, and right. That's how I am, and that's how I teach my kids as well. Oh, you're pretty good at statistics? Cool. Yeah, well, whatever. The way I look at it is I do what I do, and usually it's my best. I don't know. I think I could have done better, but I don't know. What can you do? All right, so let's move on.com. Enough about me. Let's talk about you. Don't have my glasses. I got a pair here. I got a pair there, but they're not my normal ones. We'll see. We'll see. Now I need glasses all the time. No, that's terrible. All right, so let's take a look here. Let's go one by one. These are all Swissies. Okay, and I was giving you caution yesterday, I think is the right way of referring to it. Oh, I need my drawing tool. Where's my drawing tool? Drawing tool. Drawing tool. I can't see that. Why is this not full screen? Oh, because that's gone now. Can't see. It's not working. Oh, golly, hang on. Oh, gee whiz, gee Louise. Can't see what's going on with this monitor. Why is it not working? I have an app fart. Doesn't like my other monitor. Now it's stuck. Can't do anything. Oh, I hate that. All right, hang on. Technical glitch. It won't work. Well, what if I just... This is getting weird. This is getting weird. Okay, now that works for you. It just doesn't work for me. I got this light in my eyes. So Streamlabs is having a problem. But if I kill Streamlabs, then I kill the stream. But it's not fitting into my other monitor. I guess what if I do this? Hey, hang on. If I make this super small. Maybe. Ah, ha, 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 ha! Can't hold me down. All right. Sorry for all this. Expand. There you go. Problems of working with multiple screens. All right. Sorry. Okay. All righty. So I think you can still see me okay. All right. So let's move on. So sorry about all that drama. Don't be a drama llama. Okay. And then yesterday we had this as an area of caution, right? And we had talked about this on other yen pairs and on Swissy pairs, but the lesson is the same if you're a macro trader, and I am a macro trader, right? And worried about typically in a scenario such as this, you want to work your way back this way, but on the yen pairs, many of the yen pairs have blown this way. All right, they've blown the bottom off this market. Okay, so this would make you think that there is more downside. However, this area here is still support, and under normal market conditions is a lousy place to continue selling. So you have to decide, are you going to trade differently or follow your overall rules of engagement? Okay. So one way of thinking about it is, if you sold at what you thought was support and made money, are the pips going to make a meaningful difference to your trading at the end of the year? The second thing is, what happens to your discipline if you say, whoa, this time it's different? Okay? Because I'm worried if it's different this time, you're able to talk yourself into being different some other time. And pretty soon, every time is different. You see what I mean? So if you made money here and became less disciplined, would it be worth it on the long run? Or on the long run, if you just said, okay, we've hit our targets, I'm walking away, and the markets, let's say, move 200 pips, will it matter at the end of the year? Will anyone see that you didn't trade when you felt the markets were risky? Okay? So you have to make these decisions. There isn't one rule. That goes into your business plan. Okay, so make those decisions. So again, the point is, we're at support, but all the end pairs are already through support. So therefore, you could anticipate this going lower than the normal support zone. Okay, so I'm using sort of like correlation. And even the causation is the same thing. Okay. Okay. Up, Okay. So I think what we talked about yesterday on this one is this, where I said if you were a bear, you would sell up high, right? You don't know if you're correct, but you would sell high. And if you're a bull, you would buy low. You don't know if you're right, but that's your first opportunity here. Second one being down here. And at the end of the day, or at the end of the week, or at the end of the month, we never know who's going to be correct. Right? We don't know who's going to be correct, but you need to trade properly. If you don't trade properly, you're not likely to succeed on the long run. There might be, on the short run, you might be somewhat profitable. On the long run, you're going to lose all your money. Okay? So in this case, if you were a bear here, and you were a bear here, and you were a bear here, oh, you got paid. Okay? Now, a bull still has that as a plausibility yesterday, and we may have talked about it. I can't quite remember. I would assume we would have talked about this as being potentially a bullish entry, and probably we talked about this setting up as a double bottom, right? Probably. I don't remember precisely, but I know me, and that's what I would be talking about if I were me. So that was the setup, and no, didn't get it. I mean, it still could like pop up, and it doesn't look like an Arctic turtle scenario. So this is another example of the yens bringing the Swissies down, and it's risk off. Oh, we did? Oh, thank you, Ron. So we did. Good. So Forex Pipper says USD Swiss franc is blah, 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 blah. Well, here's the problem. Generally, the dollar's been strong recently, probably because of the carry. and it was a little more risk on. Now it's risk off, and Swiss franc is strong. And so I don't know if I wouldn't trade, let's do it this way. I wouldn't trade USD Swiss franc down. Okay. I would trade Euro Swissy down. I would trade Pound Swissy down, but I wouldn't trade USD Swissy down. Okay. With my glasses on, my eyes look swollen. You know what it is? It's wine. So I had like over 10 cups of coffee yesterday. Over. And then it's at night and I got to go to sleep. I don't want to be up late. So then, you know, I got to drink wine. So anyways, that's just alcohol, my friend. Okay. So right, so the Euro and Swissy are great to kind of carry against, right? Yeah, I need to put cucumbers on my eyes. Yeah, you know what I need is a day off. But I don't want a day off, so that's the funny thing, right? I don't want a day off. I could use it, though. I don't want it. So anyways, Pound Swissy, let's take a look at that. I had trapped this, if you recall. Range bound is the most likely scenario. But we know yens are probably dragging this down. But it doesn't matter, in my humble opinion. The reason we have rules of engagement is sort of probabilities, right? It's just probabilities. So if it usually goes up in this scenario, this is an outlier, and I don't really care. So if you were to try to rid yourself of outliers, so like in statistics, you take a data set, this is your trading results, winners and losers over a long period of time. But what you can do is you can filter all this, right? And you get like a plot that looks something like this, okay? And these are all the outliers, okay? And if you look at the middle half, if this is, okay, if this is the second, is that right? One, two, three. Am I labeling that right? 1, 2, 3. Anyways, this area here represents where most of your data lies. This is the middle 50% of all your results, let's say. Or if it's not results, let's say it's market setups. It's some sort of market data. What I'm suggesting is the vast majority of the time, all your trading should be based on what's in here. Okay? And the few outliers, we don't even look at those. They don't even really exist. They happen, but we ignore them. This is like, here's where you sold below the monthly S2 and made money. And here's where you sold below the monthly S2 and made a ton of money. And here's two opportunities where you bought above the monthly resistance of R2 and made a ton of money, right? But the vast majority of the time, your trades are in here, right? Oh, this is your how you make a living. These are flukes, and there might be 10 times more trades in here. there might be 100 times more trades in here. There could be 1,000 times more trades in here, and then a few outliers where you made a lot of money doing something stupid. So it wouldn't matter on the long run. It's kind of what I'm trying to get to, where 90, let's say more than 95% of the time the market is in here. Okay, let's say 95% of the time, right? Should I even care if this drops this particular month? No, it's sort of irrelevant. It's an outlier, and the money is made in here. Like you want to be a rock star, a rock star trader. Well, the money is supposed to be made like down, 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 up, up, sell, down, 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 go away. That makes you a rock star, where you're just like, you know what? I'm done. Give me my money, right? All the losers are like, hey, man, why are you leaving now? You can't cash out now. Hell yeah, I can cash out now. Watch me, brother. Boom, take the money, walk away from the table. Go talk to the girls at the bar. Let the losers hash it out. You shouldn't be in the market. You should be fat and happy with your money. Okay? Okay, you see what I mean? So to me, that's fool's gold. It's irrelevant. And I'm trying to tell you that in the long run, it won't matter. And that your analysis should kind of show you. Now, with that being said, you could scalp the heck out of it because scalping doesn't have a bias. So get in here if you want and take a bunch of small shots. Okay? But it's not like real trading. It's only scalping. Pick up some money if you want. This is MT4. Yeah, this is MT4. Okay? So you can still but it's not like serious trading. But yeah, you can if you want. What I find though is if you don't have the skills to do the easy money, why would you have the skills to do the difficult money? Right? Like you missed that one, you missed that one, you missed that one, you missed that one, but now you're going to be a trading genius down here where there's extremely high risk. Well, good luck. Good luck. Okay, so what you want to do is what I was showing you statistically was the IQR, the interquartile range. Okay, and what it's trying to do is looks at a data set in the middle 50%. So let's just call it the safest trades in the middle 50%, not the lowest part, right? And not the highest part. I'm more concerned about it's skewed right. So I'm worried that you take high risk, low value trades and make money. We don't really want that. So we want the middle boring trades. Okay. You need to make money, but they should be very, very average, straightforward, right? James says swing trading course. Okay. You have a statement or a question? So anyways, so going into here, it's kind of where we left off. If you were bear, you sold. Pretty straightforward. If you're a bull, this is a potential entry. So you should pay attention because you might get an up, and be long. You should probably be long Thursday or Friday. Yeah, that's right, Pedro. Neuro-linguistic programming. That's why I do that. Those are called anchors. There are audio anchors, and there are visual anchors. So when I talk about hammock, I do a couple of things. I say, "Arr, arr, arr," and people jump out of their hammock, put their feet, right? They're already wearing their uniform. And they jump out of their hammock, slip their boots on. Their boots are already set up with the tongues open, the laces loose. You can just slip your feet right into your boots. And you run out the door, run down the hallway, and at the end of the hallway, there's a big, heavy metal door that swings open, and you have to dip your head under. And then you climb up the ladder, and you get to your position. And then you find out it's just a drill, right? It's just a drill. So, you get out of your station, you go down the ladder, back down, you dip your head under the door, you push it shut, and you go down the hallway, slip your boots off, climb back in your hammock. That's visual. If you've heard the story enough, it's visual, right? The anchors are you're swinging in your hammock. You slide your feet because you're already wearing a uniform. You slide your feet into the boots. You run down the hallway. You open the heavy door, swing it open, duck your head under the door, climb the ladder, and get into your station, right? These are all visual elements. Now, what I need to do is tie that to a lesson. And I say you need to practice 1, 2, 3 patterns over and over and over and over until you can do it in your sleep. And when I do the full hammock presentation, I say I do it 2 or 3 times over and over and over, and you hear the captain over the loudspeaker. Now it's audio again, right? That it's just a drill, back, all that kind of stuff. And eventually, I say you're still sleeping, and it goes, and you jump out. You don't even wipe your eyes. You put your boots on, and you can get down the hallway, and you're in your station. You haven't even opened your eyes, right? You can literally do it in your sleep. That's all neuro-linguistic programming. So the reason it works is that I'm taking something like, hey, this is a 1, 2, 3 pattern. You should practice it a lot. So now you can see it, right? You can see what a 1, 2, 3 looks like. So I tell you things. Okay, 1 is the double bottom, 2 is the higher high, 3 is the roll reversal, right? So double bottom, higher high, higher low, or roll reversal if you want. Okay, that's all visual. But then now you also have it stored in part of your brain that's, right, visual in a different way. Not with your eyes, but inside your brain, and then you can also hear the alarm, you can hear my voice, all this kind of stuff. If you actually write it down and type it and all that kind of stuff, now you're using different parts of your brain. But what happens is it gets these images and these sounds get deposited in different parts of your brain. And the more parts of your brain this knowledge gets deposited, the better the recall. Okay? So in my book, I actually tell you to write things down with a stinky felt tip permanent marker. The stinkier, the better. Why? Because the smell of the marker will help you recall what you're writing down. Okay? Now, once again, it's considered one of the worst books ever written on any topic, but specifically Forex trading apparently is just like every other book. That's what the reviews on Amazon.com say. But I find it hard to believe that everyone does that in their books. So maybe it's just trolls or something. Okay. So the question is, does it work? And it absolutely does work. Right? How do I trade strong versus strong? I don't. Well, discuss the long-term idea. Now, I don't know what your long-term idea is. So how many people here trade oil? The question here was long-term idea for WTI. So Floral Experiences says, can we discuss the long-term trade idea for WTI? How many people trade oil on a regular basis? Or let's say want to trade oil on a regular basis. Okay, a few people. Okay. Not as many as I would have thought. Okay, let me ask you this. The International Energy Agency released their economic report yesterday. Did you download it and read it? If you did it, you're not an oil trader. International Energy Agency, IEA, Bubba. Okay. So if you didn't do that, I'll go right to the homepage. Right here. Oh, no, that one. World Energy Investment, Sustainable Energy, Capital. It's under stats. Where's the stats? Okay. Look at that. You read that, right? You can go here. What do you want? Okay. Look at this. Look at all this gorgeous information. So I would say to you, if you want to be a serious energy trader, this would be at a bare minimum something that you would be reading and developing. Yeah, beautiful bullet points. So Floral Experience said, I forget how it was, the question, what basically the long-term outlook. I'm like, well, that would be something basic. I would have read that and done some analysis to create a bias. You can also go to the EIA, okay, which is not global point of view, now American point of view. And I get weekly updates from these guys, okay? Anyways, there's tons of data published. Okay, look at this. So, I mean, those are just two sites you should be on, like, on a weekly basis. Okay? You see what I mean? Like, if you're not doing that stuff, it's amateur hour. Right? If you were seriously an oil trader, that would be the very basics. You'd actually be insulted if I said, well, are you reading those reports? You'd say, well, what the hell do you think I do all day? I said, I don't know, actually. I think you wing it. He's like, you crazy. Right? Okay, you see what I mean? Okay, so that's how you create your bias. That's how you create your outlook. That's how you create a trade plan. You start with that. And by the way, I highly, highly recommend you specialize. And if you actually are interested in that, yeah, you should totally specialize in becoming an energy trader, because it's pure macroeconomics, micro in the sense of, I mean, you could study global economy and try to do demand side equations, right? And then the other part of oil is supply side, and, is Iran going to get pulled out of the market? Venezuela is dead, right? But what happens when these guys, if or when they come back to the market, all this kind of stuff. So oil's really nice because you can do macro and basically micro when it comes to supply side, right? And you can make a living out of this, right? So you could be trading nat gas. You could be trading American oil. Okay. Does it work? Maybe you're asking. Does it work the same as Forex? Well, this is the monthly R1, and that's an unusual top, and that predicts the bottom to be monthly S1. So this is monthly S1. So this unusual top predicts this unusual bottom, and oh my God, it's working perfectly. Oh, well, that's nice. That's really nice. Okay, so that's American oil. And then you can do international oil or North Sea oil. Okay, this is UK Norway oil. Okay. And, interesting things. This is held up on an M2, which is still a launch pad this way. Interesting, right? So WTI has been pulled down more than Brent. Brent's usually a leader. So anyways, dude, you could just make a living just doing oil. But I've also asked you to subscribe to the idea that you should specialize in something. You trade only oil or energy, so you can do nat gas and both oils. But then you could probably trade Norway and CAD as well. So now you got a couple of currencies. But to you, it's all just oil or energy. And then macro, and if you get macro right, now you can do Swissy and yen and all that, but you don't even have to get there. Okay? What else could you do? Well, you could specialize. So in my book, I say, become a greenback guru. Only specialize in the US dollar. Become an absolute total market expert for US dollars, so that when CNBC needs an expert, they call you up. Yo, get in here. We want to talk about the dollar. Thank you for subscribing. You too, Calon. Rand here, Kalon, big fan, man, sub, da. Wow, you guys have long YouTube names. Thank you for subscribing, Forex Trader Night Owl FX. Cool. So anyways, I'm trying to get you to think professionally, right? So I'm trying to teach you things like do fundamental analysis, develop a bias, have a long-term plan, have a 6 and 12-month outlook, specialize. Because think about it. I mean, at least where I come from, if I have an electrical problem, I call an electrician. If I have a plumbing problem, right, or a water problem, I call a plumber. If I have a roofing problem, I hire a roofer. If I have a cracked foundation, I hire, a mason or something. In other countries, though, I know, like, if your air conditioner breaks, call Bubba. If your roof leaks, call Bubba. If you have a cobra in your backyard, call Bubba. And it'll only take him a week and a half to like screw around with it until maybe it works. But typically the world, an efficient world, wants a specialist. And again, now we're talking microeconomics again, and not from my class, from a different class. But when you look at capitalism, it favors economies that specialize. You can make laptops and you can make bicycles. The countries that try to do both do so with mediocrity. And it has to do with economies of scope and scale and all these other things. But it's better off for one country to make bicycles, the other one to make laptops, and you trade with each other because you will both benefit more from the specialization. So to take this to like your small business, your small Forex trading business, you need to be an expert. You need to specialize. So again, these are sort of bigger level messages I keep trying to share with you. You need to be an expert if you want people to pay you money. Now, why do you want people to pay you money? In this case, give you their money to trade with? Because we know the secret to your success is assets under management. And so one day, because you might not have $1 million laying around to trade with, you're going to need to have other people give you their money so that you can accumulate $1 million worth of assets under management. So now you do have $1 million. So how do you get there? Well, first of all, track record and knowledge and experience and all this stuff, right? But ultimately, you have to have a point of view. You have to be a specialist. They have to come to you and say, I need some knowledge. I need a service from you. What is it that you do? And you're like, I do everything and nothing at all. You have a failed business. You might be a great trader, but you'll never raise assets under management because, right? Because you don't have a specialty. Or you say, well, I specialize in G10 currencies, in particular on a macro level, which means I'm watching blah, 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 so I can do blah, 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 but it's very specialized. It's very specified. Here's my disclosure document that outlines the strategy and the risks associated with it. Here's my track record, right? Here's my point of view. Here's my specialty. Here's my background. Here's blah, 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 blah. I'm the world's greatest. If you give me your money, this is what I'll do, and this is the likely outcome. You're hired. Okay? So I'm planting these seeds over and over and over again. So WTI, what's my investment outlook for WTI? Why don't you read the damn report and come up with your own? Because my opinion don't matter none. Because, right? Because do you remember? I said it would go up here. 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 Right? So if you didn't trade that, and 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 you didn't, this doesn't matter now. What does matter is you've read the reports and you're thinking, what will happen this month, next month, and the month after? And what are the key things that will go into this analysis? Well, you got the June Fed meeting and the September Fed meeting. We got the IMF report in June. We have the OPEC meeting. Is it end of May? It's coming up soon, isn't it? And then there's another one there's another one in October. Okay, and so on and so forth. And you start threading these things together, and you know. Is the economy going up in the next 6 months? What will the economy be doing at the end, on New Year's Eve? Well, that's going to affect whether you're a buyer or a seller. Okay? And I don't really even care whether you're a buyer or a seller or not. Okay? I just want to know that you know what you're doing. That's all that matters. The only thing that matters is you know what you're doing, because once you know what you're doing, you're picking your lines. And if you're picking your lines, you have focus, you have intent. Do you have intent in your trading? My daughter was at a party recently, and I said, "How was it?" She said, "Oh, we had a real intense volleyball match." And I said, "Oh, I used to do that when I was a kid when we went camping." And she said, "You played volleyball when you went camping?" I said, "No, but we were really intense." And she just melted. It was just a beautiful setup. Yeah, you have to laugh. I mean, come on. Yeah. It was just so beautifully set up. She's like, oh, Dad. Yeah. Some people are still like, I don't get it. Oh, that one's old, Jim? Jimbo says that one's old. I don't know. I thought it was pretty good. There's still people scratching their heads like, I still don't get it. All right. So anyway, specialize so that when a rich person meets with you 5 or 6 or 7 years from now, you can say, well, if you invest with me, you'll get exposure to the global oil market. Okay? Really, Jimbo? Oh, I guess so. Maybe I'm just slow then, right? All right. All right. So let's get out of this. So this is the beast breaking through. Did we talk about scalping it as a role reversal? Guys, did we talk about like the big trade should be done because of this? So this predicts that, right? So we know that. And then you know what we talked about yesterday was the Moo trade, which is typically not done on a monthly basis. But what we talked about it, because we're lower, this is a fundamental move, not a technical move, right? And you never, ever, 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 ever bet against fundamentals. Okay? Another image that I think of, because I've anchored it for myself, is I think of all those horrible videos of the tsunamis, right? And you just see people like on a balcony, and there's just cars going by and houses going by and just junk and debris, and the river going down the street is so crazy intense. Like, it's crazy, ridiculously violent. And I'm thinking, I wouldn't want to try to swim upstream. That's what I think. That's one of my visual ones. Okay? Like, you don't say, hey, I bet you I can swim against that current. So it's a tsunami type thing. A change in fundamentals is a tsunami kind of moment. And so if you're through here, right, you're going to go with the flow. And there's nothing you can do about it except stay out. Okay? So you either stay out or you swim with it. Now, the Moo trade is really from day trading pivot points. Yeah, so 15 years ago, I was teaching people how to day trade pivot points. Seems like a stretch, right? And it had to do, I used a story back then about so I guess it was like, if you broke through the range, so again, the normal range would be the IQR, and you're now through the range, you're an outlier. So how do you behave in that situation? And we were talking about a day being a 24-hour period, and we're through the expected range, but there was still time on the clock. In that case, if we're low, the advice I gave people back then was you keep selling until the cows come home. When do the cows come home? At the end of the day. That's right, Jim. So I also, in that analogy, using this analogy, I used to say it all the time, right? You be a cork in the river of Forex. These are all lessons that are very, very important. Okay. Man of many talents is already in the trade down. Well, of course. Right. That was a day and a half ago. Yeah. Okay. Now, the thing I might have an issue with, Man of Many Talents, is if you're like in here. Okay. So this is a good trade. This is a bad trade. So I don't know where you are, and you don't even have to answer it. But this is discipline. This is chasing. Okay. Chris just got out. Why here? Maybe that pivot, I would imagine. The cluster seems very attractive. I'm looking at price too. You're not even at a midpoint psych level. Seems like people are going to want to get this down closer to 140, right? They want to hit the target, don't they? Barry, the cows come home at the end of the day. This is an example of just sort of a continuation. So this isn't actually trading on this time frame, but you can thread the needle, so to speak. Is that right, Reb? I really apologize. Obviously, every time I come, I can never get a. I apologize. Yeah. I mean, here's the reality of what you're dealing with. So the chat's up here. Okay, so the chat is at this level. My charts are down here. So I look up and I look and I catch maybe 3 things. And then I look down here and I talk about whatever I grab out of those 3 things. So someone says USD CAD. So then I go to USD CAD or something. And I'm looking at this and I talk about support and resistance and and then I go over to here. And I see what you guys have said since then. But I must miss 50 or 60% of what you guys are talking, right? One thing we could do, I don't know how you feel about this, but I've seen it on like other sort of chats, especially gamer-related chats, where you could pay like $1, right? I don't know if it's worth it to you. You can pay $1, and what it does is it takes your message and holds it at the top for like 5 minutes or something. So when I'm looking down, I'll talk about what I'm talking about, and then I'll look up and it'll say, boom, Reb asked me to do this. And then, of course, I think, oh, Reb's paid me $1, so I really should answer Reb's question, and that kind of stuff. Right? So I don't know, do you guys want to implement that? So if you really, who was it yesterday? Pharaoh? Please, right? Pharaoh's at the swimming pool drinking cocktails, waiting for my analysis on USD yen. So he could have just popped that up and said, come on, dude, cover this. Yeah, and I used to have that cigar fund thing, but no one ever does it. Wayne, that is called Super Chat feature. You can enable it anyway. Yeah, that's what I'm saying. Super Chat. Oh, see, look at you guys. You know what you're talking about. So, but here's the thing, right? I know you probably have a raging, burning, itchy question. But $1, oy vey. Right. Then I'll get people saying, he's only doing it to get rich off YouTube. Right? 1,000 views a day pays me 1 penny. And so if you probably chipped in $2 a day for my 2-hour webinar, yeah, I'm doing it to get rich. That would make me a whole total of $6 a month. But anyways, all right. If he's so rich, why does he do YouTube? All right, so what do we want to do here? So we put this here to identify a breakout, right? How do you trade the next move? Okay, so I'm thinking next week. So today's only Wednesday, so tomorrow or Friday we should be up here, and you should be a seller if you're a bear. Well, yeah, there's a lot going on here, right? So the question is why this? Did you hear how awesome Europe is doing now? It was either EU overall, or Germany in general or specifically. I can't remember. But they're now rocking at a 0.4% pace. Wow. But you gotta cut Europe some slack, though. It's only been 11 years since the financial crisis. And, Europe is really old, so they think on a whole different scale. What are you going to smoke, Barry? Oh, Barry's Faro. Yeah, right on. Yeah, I'll probably smoke. I smoked a cigar yesterday. I'll probably top one off today as I'm pondering things. So now that I'm done one of my degrees, now that I've done one of my degrees, I only have 1 year left to finish my second one on financial management. I think what I'm going to try to do in the next 12 months, let's say from September on, I'm going to try to do more with you guys, if that's okay. Even these little silly things, like we had an idea, like, why don't we have a online cigar group, and we can meet and talk fundamentals as a group. Maybe it's just me reading the Wall Street Journal or something, and we're all smoking cigars with the camera on and stuff. I'm like, Swiss National Bank, bunch of scumbags. Let's, and whatever, and just like super casual, like as a group of friends, talk shop. Sort of like, what do you call all those women that sit on TV and babble about nothing? Oh, that's a nice one. Yeah. The View or something. We should just be like a bunch of like Barbara Walters and Whoopi Goldberg talking about Forex with cocktails and cigars, right? I don't know, but just fun things, like whatever. Yeah. So I don't know. I got lots of ideas for us to really build the community, just for fun. Yeah. I didn't do as well as I like, Edward. With the Godfather thing. Forex ballers. All right. Let's get back on track. Sorry. USD Swiss franc. Don't want to talk about that. We did that one. Aussie? No, gold. Look like Aussie. Gold! Okay. Trapped it. Okay. What do I teach? You got to go back a little bit, I think, don't we? No, I guess that's it. Okay. If you had resistance more like that, that's all fair. Okay. Okay. How do you trade this? Come on up to trade me, baby. Can't you see that I'm not afraid? How much profit that you made? So that's sort of the general. It's not perfect, right? I got this new feature. It's so awesome. I can grab this. Okay. I can do this even differently. Let's erase that now. I will take from the exact top of that wick. Okay, perfect. And see how close it really was. It's pretty close, right? Jack and Ginger, huh? Discord. Yeah, see, I don't use all these things, but I hear about them. Discord. How is Discord different than anything else? But oh, okay. I know, Barry. Shark Tank and Dragons. I see. The problem is I don't watch TV chaotic. And my job was Shark Tank. That's what I did for a living as a venture capitalist. That's what I did all day, every day. I had two assistants. I had a marketing assistant as well, just to help me review my deals. And then when I finally made a decision to bring it to the review board, then they took it to the actual research department and did the research department. Research department would bust it all through, and I would take it to the board. And if the board decided to invest, then we took it to the other side of the office, and there was about, I don't know, 50 or 60 people working to bring the products to life. And put them on shelves and stuff. So it was just that I did Shark Tank and more. It was a cool gig, but then that's what I quit. To become a Forex trader, that's what I gave up. I was a real Shark Tank dude. I listened to somewhere between 4 and 5 pitches a day. What watch do you like best? Problem is, like, a Rolex is so common, right? Like, no one gives a shit anymore. But I like them for every day. So I remember one time I was working on my tractor. And there was something wrong, and I was underneath the tractor, and I went bang. Something slipped, and my arm went bang, and I hit my Rolex right across the blade. I'm like, shit! And I looked at it, perfectly fine. And the other thing is, a Rolex that's like, let's say you've had a Rolex, you've worn it on and off, and you wore it heavy for 15 years, it looks brand new. Right? So that's the part I like about them. They're cliche. So the downside is they're cliche. The upside is they're just a freaking good watch. What do you call it? It's the one that's misspelled. I don't know. I sold it anyways. What the hell was it? Built. BILT? No. I don't know. Whatever. Rolex keeps. Yeah. Well, here's what I don't like about all these things. Okay, the pricing structure is stupid. Let's just put it that way. So on one of them, on this other one I got, where is it? This one here. This is a nice one. This is an old one. I've had this for a very, very long time. There's no band on it. Oops. Anyways, right? There's no band on it because it broke. Okay. It broke. Cool. But, it's nice. It's a nice band. So I need a new band. And they're like, yeah, it's like, I can't remember what it was. It was $4,000. I'm like, what? It's stainless steel, not platinum, bro. And he's like, yeah, it's $4,000. I'm like, I'm not that stupid. like, I don't know what they got in the stainless steel to make it justifiably worth $4,000, but I just can't do it. I'm just sorry. So it just sits there. I'm not going to spend $4,000 on a stainless steel watch band. So that's just retarded. I just won't do it. So anyways, I don't know why you guys want to talk watches. Let's do the yen. If you have requests, let me know. I'll do. Well, the stainless steel is better. There is no doubt. If you have a cheap watch or a Rolex, and they're both stainless steel, the Rolex is better. There is no doubt about that. I even have like pots and pots. Do you guys have like Le Creuset? I have a lot of Le Creuset stuff. The steel on the pot is so ridiculously better than any other stainless steel pot I've ever had in my entire life. It's magical, and I'm like, I get all giddy, and it's just a stainless steel pot. And it's a big pot for making pasta. Then you can put steamer stuff on it, and then of course all their other stuff is just fantastic. I have one for the barbecue, I have one for the oven, I have a Brassier, and all these things. Very nice. And then I have Shun knives. You know Shun knives? They're like cutting knives, right? Kitchen cutting knives. They're handmade. I can't remember how many thousands of dollars I paid for them, but each one was handmade in Japan. Took like 3, 4, 5 months to make. They're all hand hammered and stuff. 1,000 layers of hand hammered steel, and they're incredible. And the steel is better than like those German knives. The German knives seem dead to me. They're cold. They're solid. They just put them in a mold and made them and sharpened them, and they actually feel dead to me. I call them dead. And then the Shun knives feel alive. You can actually, they're thousands of layers of steel hand folded and hammered together, and there's something about it. So there's no doubt, like, the steel in a Rolex watch is better than a typical stainless steel watch, but it ain't $4,000 nice. Anyways. Okay. Euro pound, USD CAD. I want to do USD CAD. Let's do USD CAD. How do I deal with the losing trade? I get stopped out. You know, like the vast majority of my losing trades, I get stopped out. So I have a stop loss. So I don't even see them. Like, why would I be watching a losing trade? So a losing trade, they're inconsequential. Okay? Honestly, I don't see them. So what happens is you look at your trading account, right? Every morning or every night or probably three times a day, you check the count, and all you see is the trades you're in. You understand? You're looking at it and like, there's all the trades. There's my floating profit and loss, right? And all that kind of stuff. But I don't like then go and say, oh, well, what did I get knocked out on? No, they're gone. They don't exist. So they're totally easy. Now, a loss only matters if, of course, if the majority of your trades are losers, then they matter. Well, that would be one problem. Or your losers are so big that they hurt you financially. Well, that's a different problem. But if you trade properly, those are not problems. I don't have those problems. You see what I mean? So why would I look, let's say I lost 72 pips yesterday on closed trades, but I'm up 550 for the week. I don't see the losers, and I'm not even counting the winners because I'm in it for a time frame and I'm in it to a target. Like, even counting the pips, it's all irrelevant. You have a trade plan, you identified the setup, you identified the risk, you identified the target, you placed the trade, and then I go find another trade. Like, they're gone here mentally and emotionally. And so when I'm looking at my account, I'm like, oh, look at that. Yeah, I thought so. That's usually the thought process is, I thought so. Or this is taking longer than I would have liked or assumed or thought, right? So it's either taking a little bit longer or, yeah, I really thought so. And then the things that didn't work, you're like, they're just, it's, you know? Mike says, have you ever placed a trade, forgot about it, came back, and you realized you're up a lot of money? Yes, but it's actually a strategy, Mike, that I've recommended to people, especially when you're trying to learn how to carry trade or position trade. But really, that is the idea of a long-term trade, Mike. You want to set it and forget it. It's actually something you should practice. Okay. I have trades open for, I think I'm coming up to a year. Some of the other trades I'm in now, I've been in, I think it was June that I placed the trades though. Those are like my longer trades, right? So the whole point is to forget them. So that's why you have multiple accounts, Mike. And so let's say in the summer, so like June. Remember, I talked about June being an opportunity to start planning trades for the next year and stuff. So when June comes around, you can look at global macro trades. So I'm thinking long term, I'm thinking forever, really. And I'm thinking, what is the next year going to be like? Okay, bias. So we'll just call that a bias. So it has nothing to do with now. It doesn't have to do with today, this week, or the month. It has to do with buying in the summer and then riding into a macro trend. Okay? So the goal is when you do actually place the trade, move your stop to break even. Okay? And then forget about it, Mike. And if you need an account specifically for carry trading, you should do that where you enter your trades, you get a bunch of trades in, and maybe once a month or every other month or whatever, at some period, you go and check and move a stop and lock in some profit or maybe add another trade. But the whole idea is to place the trade, get it so that you have zero risk, and then come back December 31st. Oh, the future says, I'm new here, like what I said. Make sure you subscribe. Come on, kick down, come clean, don't be a holdout machine. Make sure you participate in the conversation. Oh, cool. If you've read every book and then mine is different, then make sure you leave a positive review on Amazon.com. Okay. Another thing I might do when I get back from Harvard is I might write another book. Over the course of like August, bang out a book or something. Preferably trades with swaps. Yes. So, yes. Yeah. Yeah. Okay. And by the way, I don't make any money on the book, so if you just keep saying to yourself, this guy is just pitching his book, no, I wrote it 10 years ago, 12 years ago. It was sold 10 years ago. But I don't make any money. Oh wait, I have a royalty check somewhere. Right here, actually. Is this it? Yeah, right here. From Wiley. Gotta do this. From Wiley. Okay. Let's see. Should I show it? Can't even do it. Where is it? $150, bro. So you can buy the book. You ain't making me rich. I have carpal tunnel syndrome. So I think it comes down to something like every 3 days somebody buys my book, and I make $150. And I think that might, I mean, whatever, dude. So, yeah, you're rich. Yeah. So I'm telling you, I threw a party for 3,000 people when I launched that book, and bought alcohol beverages, one alcoholic beverage for every person at the party, and had the cups custom made, had the drink tickets custom made. So you pulled the drink ticket off to give to the bartender, which cost me probably $10,000 just for the bartender, right? You gave him and he gave you a ticket in a camouflage cup with the logo and everything. And the other side of your drink ticket was a bookmark for the book. Like, beautiful. I must have spent like $100,000 on the party, and I make $150. Like, so I'm certainly not doing writing books to get rich. But anyways, I wrote it to help you. All right. So we did all this. Look at all this. How gorgeous. Oh, here's something that's interesting, though. This is suggesting close to a bottom. Not that it will be a bottom, but somewhere in here based on essentially a standard deviation, right? So you look at the covariance, right? You look at the covariance and you square root the covariance, and you'll get a standard deviation. And so it's looking like, okay, here's the mean. Here's a variance, there's two variances, there's a covariance, right? Make sure that you square root it to give you a positive number, and basically this is potentially a bottom based on this top and this bottom of the average, okay? Variance 1, variance 2, covariance, square root to get the standard deviation. This is potentially a bottom based on what's happened in the past, right? John Gee says it was a huge help to me buy the book. Right on, thank you. Thanks for the $5. Right, John Gee, thanks for the $5. Now, what sucks though is the book is $50, right? But it's not my book; it's Wiley's book. So the next book I'm going to self-publish so that it doesn't have to be $50. Jason says, when the cows come on, do you take a profit? Maybe. Often, so it depends. If you're talking about day trading versus swing trading, there's sort of a different answer. And we saw this, was it gold? Hang on, let me see if I can find it. Something triggered my brain earlier today. Let me see if I can bring it up. Was it gold? Is it oil? There was something in here that had to do with a different time frame. Something looked one way on a small time frame, but different on a bigger one. I can't remember which it was, but often what I try to do is if it's a clear trend and then you have sort of a period of in between, I try to let it go this way, even if it does this a little bit. And the reason for it is it's just a different time frame that traders are trading. Okay? Because traders are simply doing this on the higher time frame, and everything else is noise. Okay? So if we're down here, I'll still kind of, I don't know if that makes sense. So kind of, the overall, the goal is to let your winners run. Okay. So Reb, did I get your question today? Come on, Reb, I'm waiting. Thank you for subscribing, guys. Make sure you show up 7:30 a.m. every day. The webinar starts. I might start doing polls so that you can ask me to cover specific pairs before the webinar starts. No, I'm waiting, Reb. I don't have your question. I can screw, right? Waiting, come on, Bubba. Oh, quick pivot question. I like trading higher time frames, but I find an entry on the 1 hour. So should I use the pivots on the 1 hour or the daily? Well, so you say high time frames. What does that mean? 4 hour or 4 hour or daily or what? So I'll try to answer it I start with a 4 hour. Okay. I start with a 4 hour. And if it's the end of a month, I'm planning next month and next week. Okay. This is generally swing trading. This can become carry trading as well. See, I don't use the daily chart. Okay. So anyways, because it doesn't matter to me, I'm not using the moving averages in that sense. I'm looking at support and resistance before I look at a moving average, right? So I come up with a strategy on the 4 hour. It could be daily. It won't matter because I'm looking at this first. Okay. And then I drop into this. So how is the month going to start? But the month is what I'm planning. And this could, depending on the pair, become a carry trade. Okay, but I'm lining up the weekly with the monthly. And on a 4 hour, and I come up with a strategy. Okay. Now the entry is going to be the same for the two. One gets me going, the other one I stick with. Okay. Now, with that being said, you said something about the hourly and daily pivots and stuff like that. So in that scenario, I have my strategy. So let's say I look at this and I say bear. So now I look for bearish entries based on this and I find them. And then once we're near them, I'll bust out day trading. Okay. And I'll day trade my way through this strategy. Because to me, day trading is all tactical. Okay. And I'll use, on this, I'll start my analysis with 1 hour, which is like, so like this is a day trading setup. Okay. So that's a day trading setup. That's on an hour, but there, I don't need more time because I already have a strategy, right? So that's like that one I'm messing around with. What is it? That's a Eurozar. Is that right? Yeah, Eurozar. So what do I have to do here? So this will have a version of it. Eurozar. Okay. So you can see what I'm doing here, right? You see all my stops? Clear. All right. So these are all my stops. You see them? And where are my entries? Short, 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 and I must have hit a profit already, so I'm already out on one. Probably this one, right? So I was short here, down, 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 up, up. I shorted here, down, 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 down. I shorted here, down, 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 down. No, this one, down, 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 down. I shorted here. Can't see it. Why can't I see it? It's hard to see. Let me try it again. Delete. Where are they? See, I'm short. I'm short here. I'm short here. I'm short here. I'm short here. And I was short here. And I must have got busted out down here. Profit, right? And all my stops are here. Okay. All of them starting with a resistance to support kind of idea. Double top. Okay. Lower low, lower high, sell the rally, lower low, lower high, sell the rally, all this kind of stuff. So it starts here on the 4 hour, and then they're essentially day trading on smaller time frames. Okay, does that make sense? So like if I move this to a day trade scenario, okay, see, sold right where I was supposed to. Don't know where this one was. Anyways, I can't fit it in here, but that's how I do it. Any questions about that? Yeah, well, that's how trading should be, right? I mean, again, I think once you learn how to trade properly, and I keep trying to teach it, right? But if let's make this fatter. If the overall trend is like this, I have to make a decision, okay? Then the rest is easy. Right? Because I say, well, it started like this. I saw the double top first, right? So then I say, well, I can trade a double top. So let's, oops, let me start over again. And let's do it this way. And let's go that way instead. So, all right. So let's say I assume a double top, and I can do that with pivot points, right? And then I see a double top. So I can start and say, well, there's a reasonable probability this is going to double top. Didn't want that to be a line, but anyways, there's a reasonable, right? So there's a trade opportunity. I could sell that if I wanted. But typically what I prefer is this. And now I know how to trade. I have a double top and I have a lower low. So trading is very easy, or easier, because I've already made the decisions strategically, right? So now I'm like, oh, well, I want to sell around here, right? And then it's going to come down and then up, and I'm like, oh, well, I'm going to sell somewhere around here, right? And then it falls, and then I say, oh, well, that's cool. I want to sell somewhere around here. And then it rises, and I'm like, oh, that's cool, right? So that's price action. But then I start using some helpful tools, and I find out this is a sell zone pivot wise. This is a sell zone pivot wise. Okay. So I find like, so that trade was just like we're talking. I saw a double top followed by a lower low, and the double top was a pivot. So it was an assumption. So I think I sold the double top. But the thing is, I think I had a 333 pip limit or target. So I already made the 333 pips. So like, unfortunately, I'm already up. But this one's still open. This one's still open. This one's still open. Okay. And there's a combination of price action, monthly swings. There's, I think one of these is a weekly swing. I think the 2 or 3 of the open ones are day trades. And so I have monthly swings, weekly swings, day trades, and they're all doing the same thing for the same reason, right? And the reason being, it was my strategy. So I mean, this is what I'm trying to teach you. So the interesting part is, even though you see it, and I teach it day after day after day after day, you fight me on it. And then some people will say, well, why don't you just tell me what to do now? Well, first of all, I'm watching my charts all day, every day. Most of my trades don't come in New York anyways, unless I'm scalping. Now, why is that true? Well, I day trade, and I swing trade, and I carry trade. They typically happen at the end of markets and at the beginning of markets. Not necessarily like New York. New York is in the middle of the day, right? So New York is better for like scalping and spot trading, which, you know, I taught that for 10 years daily. So you can watch the 4,000 videos and do that now. Now I focus much more strategically, because I found after 10 years of just telling people what to do, they didn't do it and they didn't learn. So now the last, let's say 5 years, I've been focusing more about how do you become a bigger trader, a better trader? What do professional traders do? What direction should you be going in? How do you think strategically? How do you thread this together to multiple time frames and then drill down to smaller time frames? But I'm not with you 8 hours a day where I can say, all right, nothing's happened for the last 6 hours, but I think somewhere in the next 2 hours, we're going to get a 5-8 cross on a 15-minute chart. Let's all wait. And then 2 hours goes by, and then finally, well, what a giant waste of time. So you're supposed to learn how to do that for yourself. And I teach you how to do that. I mean, we go through it every day. So if, like if you were a bull, oops, now I got to change colors now. Okay. If you were a bull, because we covered this 2 days ago, so I only gave you 2 days in advance warning. Boy, this is fighting me. Okay. I only gave you 2 days advance warning. Okay. But this is a bullish buy zone on a roll reversal. Taught you how to do it, showed you how to do it, discussed it with you when it was way up here. So you're going to need to like thread it together and say, you know what, I'm a buyer. That's a buy zone. This is a buy zone. Eventually you're going to have to buy it. But I can't sit around 24 hours a day waiting for that to happen for you. Now, this goes back to our training wheel discussion last week. I am intrigued by this idea where I want to help you plan these things and say, if you're a bull, because you have to tell me you're a bull ahead of time. And you say, Wayne, I'm a bull on gold. And I'll say, oh, cool. Well, this looks interesting. And now you still have to thread it and you thread the needle, but I want to maybe help with the planning process. Okay. So like, do you buy this? No. Do you buy this? No, that's bearish. Do you buy this? Yeah, you buy that. Okay. And that's what the training wheel thing is all about, where like, what if before the day started, I don't care where in the world you live, at 5 o'clock Eastern time, which is what, 5, 7, that's 10 hours before London opened, I send you a trade plan to review based on your own bias. And maybe even based on the currency pairs you trade. It says, well, you know, this might be an interesting, you know, strategy. So it's all strategy. And you still have to thread the needle and say, okay, well, when we're in these, when we're in these areas, you should be trying to implement what I teach you all day, every day, using like price action and pivot points and moving averages, but at least you're not thinking down. Oh, I lose multiple times a day. Okay. But one of the ideas with losing trades, because honestly, I don't care about losing trades. So one time I made a mistake with my webcam. I thought I shut the webinar off. And I walked away and I opened up my live account, not my coaching account. Like this account only has $30 or $40,000 in it. But I accidentally opened up my trading account, and I looked at my positions and I walked away for a good 20 minutes. I remember I went to the bathroom, I made a coffee. This was back when I had a big office in the skyscraper. And anyways, I come back and the chat room's on fire. And people are like absolutely freaking out because, you know, I spent years going, oh, look, right, here's the fair market value. Here's a rollover on the 2155. And then you got, right. And I spent years, all of a sudden they're like, holy crap, moly, you have 100 and something trades open. I remember people were freaking out. They're like, oh my God, right? It was just totally on fire. You have 138 trades open. They're like, ah! And no one had ever seen it before because I talk about, well, look, if you think that's support, you trade that. And then here's an entry there. If you're at support, that's on as well. So I'm doing all that kind of stuff, right? And people went ape crazy. And I said, okay, whoa. What I do and what you do may not be the same right now. Okay. But then I said, check out the what do you call it? Available equity, right? And that's a percentage, right? That's between me, God, and the IRS. Okay. Anyways, available equity tells you based on how much you have at risk, how much you're allowed to continue trading, right? I had something like 98% available equity, which essentially meant if I had 100 trades open, it just depends on your risk and all that kind of stuff. But let's just say 98 were profitable and 2 had not become profitable yet. Now, the question is why the 2%? Well, those are the trades I might have made this week or that day. And they were not bad enough I wasn't knocked out yet, and everything else were winners. So, you know, then you might say, Wayne, are you suggesting, you know, you have a 98% win rate? No. So how do you get that many profitable trades? Well, you cut all your losers, and you let all your winners run. I didn't have any losers except for this small percentage because I got out of my losing trades. Why would you be in your losing trades? And then my winners were up. They were profitable. Well, why would I get out of a profitable trade? So the idea is you move your stop, right? After a while, you protect 25, then you protect 100, and then you protect 150, and then you protect 300, and then you protect 400, and then you protect 500. Meanwhile, you're adding more trades, more trades, more trades, more trades, more trades. And then you're right, then you lose 20, lose 25, lose 33, lose 20, lose 33, lose 8, lose 1, lose 5, lose 33, lose 42, lose 20. But meanwhile, the winners are running up 500, up 600, up 700, up 800. And so what happens is I keep moving my stop. And then one day, they're all gone. They're all gone. They're all gone. And you have nothing left. Because what happens is you lock, right? The market, what happens, and it's inevitable, it always happens. One day the market does this, and you had 100 stops here. Some trades were here, some trades were here, some trades were here, some trades were here. And you get all your trades. I've been like, I've had like 15,000 pip months. And then the next month, I lose 1.5%. And why is that? Because I've cashed out to nothing but losers. And I'm building up a new portfolio of winners. The 10 or 20 pip a day stuff is for basically people scalping. And it's not a real strategy on the long run. Unless you're a market maker for a bank or something and it's risk-free. Okay? It's not the right, but if you're selling something to a group of people that want to make money fast and do not want to do the work and do not want to know the knowledge, then you can sell them this idea like you can't lose a lot of money if you're not risking a lot of money, and there's quick money to be made and all this kind of stuff, and you can just rack these things up, and if you have a really high winning percentage, why wouldn't you? Because of my magic system, you'll make a lot of money quick, and you don't need to know things like fundamentals, and it's all in the price and all this kind of stuff, and it's really sellable to the gullible. But if you simply do the math, and of course, most people can't do the math, I think they can do the math. They either don't know how or they don't want to. But if you just do the math, you will never, ever, ever, ever get filthy, stinking rich scalping. It's not possible. So people buy a system because of the sales pitch, but if they just did the basic math, they're like, well, actually, that doesn't make any sense at all. So I don't know. I'm trying to show you the right way. And so I'm thinking of different ways of teaching you and guiding you and offering tools that will help you, that kind of stuff. Right? Right on, guys. Well, make sure you visit FX Bootcamp as well, all right? Get some training. But I think I got about 20 people said that they're interested in the training wheels idea, where every day, 10 hours before the London Open, I give you a trade plan that would fit your bias as an idea of what might happen to help you with your planning, but also like this would be an example of a decent day trading plan for today. It would only be day trading, I think, right? It would just have to be like, this is what I'm thinking today if I were you. And remember, you have to tell me your strategy, which is simply, are you, on macroeconomics, like, are you bullish or bearish? Do you think the world economy is going to be better in the next 12 months, or let's say this year? Or do you think it's worse? That's all I really need. That's called a strategy. And so after that, every day, like, hey man, if I were you, I'd be looking at this and this would be the plan. It's not necessary. I'll tell you the entry. I'll tell you where to put the stop. Tell you where the limit would be. But it's only a guide. You'll still have to set up the trade, take the shot, do all that kind of stuff. It wouldn't be money management. It wouldn't be telling you what to do. But I think, wouldn't it be interesting, like, as you practice over the next year, every day you got sort of like a suggestion, hey man, based on your thoughts, like, hey man, based on your strategy, you might want to look at this in this particular way, and then from that, maybe extrapolate that out to everything else that you're planning. Remember, you would have that most likely before you actually started your trading. Just sort of like a heads-up look-see. That's why I call it training wheels. I think maybe like two or three pairs might be enough just to say, if you're a bull, go check these things out. And this is what it would be. Yeah. I asked the programmer too. I said, well, what if they wanted more than three? Can they suddenly pick their individual pairs? Like, I want euro dollar, I want pound yen, I want CAD Swiss franc. Can they pick and then just pay as they go kind of thing, or pay as you build your own basket or something? And so he says he might be able to do that. So I don't know. Whatever. I've talked to my guy. He says he can do it. But other than that, I'm studying for statistics. But anyways, if you guys are serious about that, I'll spend money. So anyways, I guess we should go. Oh, it's really late. Man, you guys let me babble on today. Yeah, I got to go. I got a meeting with my coach in 2.5 hours, so I got to roll, yo. All right, peace on earth. May the pips be with you. May your profits be above average. Thank you to everyone that subscribed today. I'm here every single day, 7:30 in the morning, Monday through Friday, New York time. There's also like 4,000 videos on YouTube associated with my work. Feel free to watch them all. Remember, subscribe, like, and comment. Like and comment. Please leave a comment. Please leave a comment. I'll see you guys tomorrow. Cheers.